And now, AM 650 presents your source for leading-edge news and information on today's hottest products and services. This is Experts on Call on AM 650.
Well, hello and welcome to Key Pacific's Talk About Strata. I'm Sterling Fox, joined in studio by the Executive Director of the Condominium Homeowners Association of British Columbia and Vancouver Province condo columnist, Tony Giventu. Good to see you again.
Good to see you too, Sterling. How are we doing this evening?
We're
just before Christmas?
Just before Christmas. You know, all things considered, I'm doing just great, thank you. You know, I had a chance to sit down and do a little reflecting earlier today. You and I have actually just completed our first year together on Talk About Strata, and 2012 has been quite an eventful year in British Columbia. So now that we have the luxury of being at the end of the year, Tony, why not cast a look back and talk to us a little bit about the highs and lows for BC Strata owners in 2012, and then we'll get to some of these emails, and boy, have we got a stack of those today.
Well, we started out with 2012 coming in just before in the fall of 2011. I think you remember we were talking about the big changes that were coming to our industry for depreciation reports.
Absolutely.
And I think this has really captured our industry across the province more than any change probably in the last 40 years. It's a cultural change in the industry. It's a dynamic change in how people will be buying and selling property, about how strata corporations are going to be looking at their annual funding, how they're going to be doing maintenance and repairs. You know, some of our emails are about, you know, when do we renew and repair and how do we pay for it, and you know, when do we fix the roof, and what's the future look like, and it's going to be quite a substantial change in how our industry does business around buying, selling, and ownership of condos.
Well, I was just going to say that, especially from the transfer of title perspective, especially for first-time strata buyers too, because now an extra tool that you have at your disposal by way of making a good decision on investing in a particular condo or not is the depreciation report. Now you have a roadmap of where this particular building or this development is going to go over the next few years and how costly it's likely to be. That has not been available to buyers prior to 2012, has it?
No, and you know, we've historically had home inspectors, right? So people would hire a home inspector, and if you were buying into a development that was 300 units, there's no way the home inspector had either the time capacity or even the experience to be able to inspect the entire building system so that you would have a sense of what the building condition is in.
Sure. And
when are the big things coming. And so really this is a substantial asset in, you know, really in the toolbox for buyers, as buyers are going to be looking at property now. And so we have a good number of strata corporations. We're a year away from the deadline date.
Right, sure.
Right? So strata corporations, all strata corporations of 5 units or more have to have their depreciation report done by December 11th, 2013. Or they have to have made a decision to exempt themselves from that requirement. And that comes with some, a little bit of discretion on their part, because I think it'll come with some jeopardy if you don't have the information available.
Has the real estate industry embraced this business of the reports that are now available? For example, when an agent is showing a condo, is that information now part of the disclosure package the potential buyer is being shown?
Well, you'll see that the property purchase disclosure statement that the BCREA and the real estate boards are using across the province as of January 1st this year actually added the inclusion for the disclosure of a depreciation report.
Okay.
And then on March 1st, we had a change to our Form B, our information certificate. So now if there is a depreciation report, the Strata Corporation has a duty to disclose and include a complete copy of that report with an information certificate. So for buyers now, one of the challenges for buyers is you don't have to have an information certificate. It's discretionary for a buyer. So, but I couldn't imagine as a buyer, even if I had cash and I wasn't looking for a mortgage, I couldn't imagine why I would not want an information certificate. It tells you so much information, just not just about what the future of the building looks like and the depreciation report and the costs and those types of things. It tells you how much money's in the bank.
Right.
How much money does this Strata have in the bank? It tells you if the Strata Corporation has any lawsuits that are active, or if there's any bylaws that I can't see in land titles yet that haven't been filed, or you know, if there are things coming that we haven't that we've voted on but are not yet executed. the information certificate really gives you a very good kind of look into the life of the Strata Corporation.
And as more and more people, particularly of the boomer generation, or Zoomers, as some of us like to call ourselves, consider that as an option. The kids are gone. That big house in the burbs is just a whole lot of work. And so why not downsize our life and make things simple? So in the process of investigating the possibility, it's really important to do the homework and to be provided with the right information while you're shopping. And this is why I'm trying to connect the dots between the potential buyer, Tony, and the real estate community who are, bridging that gap, and whether or not they're providing that sort of information as quickly as one would hope they would.
Well, the access to information is not really a problem. That's, when a buyer is coming along and wanting a Form B, they're wanting an information certificate, they're wanting copies of engineering reports, they're wanting copies of the information with respects to the depreciation report.
Yeah.
That information is pretty expeditious.
Okay.
That's not a problem. That's not a challenge. But there are other parts of the industry where there's still no disclosure because nothing exists yet. Pre-sales, you buy a virtual condo in the sky out of a hole in the ground that may or may not have been dug yet, and there's no way you can get a depreciation report for that purchase because
there's nothing to depreciate
there's
yet.
Nothing to depreciate.
It's a big hole in the ground.
Doesn't exist. It's conceptual at this point, and until the building is actually built, till the corporation is physically created in law, there is nothing that exists that you can actually execute one of these reports on. So, I think that buyers still need to be extremely cautious.
Sure.
They need to read the depreciation reports closely. But, you're a buyer. Think about it for a minute. You've found a great building that has, great designs, all the facilities you want, the great location, and you're looking at the building. It's 12 years old. You pick up the depreciation report and you start reading it, and you're looking for the critical points.
Absolutely.
Right? How much life is left in our roofing system? What about the windows and the decks and the balconies? And what about the plumbing system? And
we're always suspicious about leaky condos, given experiences over the past few decades in this corner of Canada as well, right?
Well, and if you're buying buildings that were built pre-2000 that have had no warranty, that had no rain screen, and were never remediated, then you certainly are exercising some caution. Absolutely, you're exercising some caution on these. And don't be deceived by the fact that it's a 10-year-old high-rise building that is, it's just on the market. It's a unit on the market. The building's been performing well. Everything's fine. Don't make assumptions. We've had buildings as young as 8, 10, 12 years old, high-rise buildings that have had to have major upgrades to plumbing systems and roofing systems.
Yep.
It's not about leaky condos, but some of the quality of construction has really placed some of these buildings at jeopardy. And, new buyers buying into a 10-year-old building are just horrified to find out they got to fork out a $25,000 levy.
And I would be too. So in addition to the innovative report being now mandatory, or in the process of becoming mandatory, what other highlights are there in the Strata world in 2012, Tony?
Well, I think it's no surprise to anyone that we start to see a bit of a stable line and maybe even a bit of a decrease in the value of property.
Okay.
And the market has changed. Buyers are certainly more discerning. We've seen more impact on that, and that kind of relates to depreciation reports as well. We're starting to see scorecards now for credit that are starting to reflect the condition of depreciation reports.
Oh.
Right? And so when someone is needing a high ratio mortgage, the depreciation report is a significant consideration of the mortgage provider and the mortgage insurer. So we're starting to see that impact in moving into our industry.
So a mortgage granting organization would be more inclined to play ball with you and grant you the mortgage if the building you're thinking about buying into doesn't have a lot in its report that suggests, boy, we're going to have to spend a lot of dough to just live here.
Well, and look at strata corporations. Exactly. Strata corporations can borrow money. If our strata corporation of 78 units is ready to redo the roofs on our townhouses, and we're looking probably at about $600,000-$700,000 in cost, when we're ready to do that, if the the owners want to and they wish to, the Strata Corporation can go out and borrow this money.
Okay.
It's a loan to the corporation. Everybody pays it back based on special levy. Well, the lenders, generally they are traditional banks and credit unions.
Okay.
The lenders are quite prepared to lend. The money is loaned at a commercial lending rate,
right?
And, 5 or a 10-year amortization.
And they're comfortable with the risk.
And they're comfortable with the risk, but a significant part of their scorecard is going to be a depreciation report.
Sure.
Because they need to know that there is no other major expectation in the 10-year cycle while you're paying this loan off. If they're lending you the $600,000 or $700,000 for the next 5 or 10 years, it's going to be questionable as to whether you'll qualify for it if 4 years down the road you have another potential $600,000 or $700,000 debt for replumbing a property or in-ground infrastructure. What we're really starting to see across the province is aging infrastructure of communities, though. Bare land stratas, townhouse developments, forgetting that, and this is one of the revelations of depreciation reports. We're forgetting that all of these services that are in the ground on our properties are actually our responsibility, not the local government's responsibility. So we're starting to see bare land stratas associated with Gulf resorts and, on the island. There's a number of older communities now where they're starting to look at infrastructure, replacing storm sewers and sanitation and water lines. And the expense is very high. So, just because you're in a bare land or a townhouse development doesn't mean you don't have the same kind of costs and liabilities that you may have in an apartment building or a high-rise.
Important information to remember, particularly for the first-time buyer or newcomer to the whole strata concept. And it is terribly appealing, but it's not without its pitfalls. And with that in mind, do you have, just off the top of your head, any, I suppose we've been talking about highlights, how about a low light, if there were any, for 2012 in this particular sector of the economy?
I think that one of the negative points that's going to have a huge impact on strata corporations, and I think all of us across the province, is going to be the pressure on the cost of insurance. I think insurance we're starting to see rise with substantially higher deductibles. We've had some major earthquakes in our region, so that has placed pressure on risk. Insurance companies don't sell insurance. What they sell is a commodity that is raising profit for shareholders, so they manage their risks, as they should as an industry. And so now there's this bit of a tug over those areas that are now facing substantially higher costs for insurance, for earthquake insurance, tsunami insurance, flood. We're starting to see some real pressure happening on that industry. And of course, worldwide disasters are going to continue to place a lot of pressure on that industry. So I think condominium owners, all types of strata properties where you're dealing with common property and insurance, we're going to see substantial pressure on cost.
And something that Tony continues to reinforce every chance he gets is that this is, no matter what or how prohibitive the costs may seem, it is simply unbelievably impractical and wrong to be a strata owner without your insurance, without your unit insurance, because yes, the Strata Corporation has insurance on all the common property, and we're good with that.
Yeah.
But you, the individual condo owner, need to have insurance on your condo.
Well, and sadly, we still see continuous emails of individual owners, tenants, landlords who have no content insurance and are left with the liability of a $25,000, $50,000, or $100,000 deductible from something caused from their strata lot.
Yeah.
The other side of that, just reflecting on the earthquakes we've had this year, the other side of that is very few of the strata corporations I visit have disaster plans. There's the odd one who's organized, but that means having their members lists, their occupants lists updated, having contact information, having their safety systems in their buildings well maintained and serviced. I'm surprised at the number of buildings who, just kind of neglect some of their basic emergency systems, emergency generators, for example. That simple things, but in a high-rise building of 20 floors, they're not the types of things that they can be neglecting.
Absolutely.
Because of the safety for the people who are living there.
Indeed. Our guest is Tony Juventu, Executive Director of the Condominium Homeowners Association of British Columbia, otherwise known as CHOA, C-H-O-A. And they, by the way, keep a terrific website, choa.bc.ca. Every condo owner, and particularly every prospective condo buyer, really ought to pop by choa.bc.ca CMWinsurance.ca for a good long look around, a kind of a primer before you even take your first tour of your first residence. Tony and I will be back, and boy, do we have some emails to deal with on this, our year-end show on Talk About Strata.
Delivering relevant and beneficial consumer information. This is Experts on Call, and there's more still ahead on AM 650.